So as you might have noticed already by now, the support and resistance are very key when it comes to all our trading strategies. This is basically like the foundation of every strategy, because they are very, very key points in the market and turnaround points in the market, right? So bullish move that turns bearish has met resistance. So when a bullish move turns into bearish, that means it has turned resistance and it has been resisted. In the opposite of that, we have the bearish move that will turn into bullish move when it meets support levels. So bullish is an uptrend buy and bearish is a downtrend sell. So this support and resistance levels can last for minutes, hours, days, and even years. Support and resistance levels are broken, and when these levels gets broken, resistance often becomes support, and support becomes resistance in the future. Works on all time frames, but remember, the bigger the time frame, the better. So as you can see right here, we had our support, we have our resistance over there. So buying opportunities by the support line, and then we have our selling opportunities at the resistance, right? Or our target profits for our positions that we have entered here. And obviously this will be our target positions or take profit points for positions that we enter over there, right? The market is moved by buyers and sellers. As the market moves up, it also comes back down, and when it comes back down, this means that it has actually made a resisting point, which at our resistance level, which actually pushes it to go back down, right? So when the market comes back down and bounces back to the upside again, that means it is being resisted by a support level. So it is being supported to not go down, and this is what we call our support level. The market moved to where the most liquidity is. So liquidity means money. So your stop loss is money. That's why stops gets hunted. Behind support and resistance levels are the most liquidated areas, because stop losses gets hit behind these levels, and most pending orders are also placed at these levels so that people can enter trades automatically when the price either breaks through that level or gets rejected at that level. So depending whether it's a buy or sell stops or sell and buy limits. So it just depends on the pending order, the type of pending orders. So here, as you can see, we actually have our consolidation phase where the market is basically ranging between our resistance and our support line, right? So this market is accumulating buying and selling orders. Remember, we're saying our selling opportunities and buying opportunities occur also in this market condition. You just need to make sure that you have a clear resistance and support line until it's actually broken through, right? So it might actually break through to the upside, or it must break through to the downside. So nobody can really know. You just have to follow what the market is. Never lead the market, but follow what the market is doing, right? And never trade against the trend. So as you can see right here on our second illustration here, we have our resistance and support, right? Same thing, but now our resistance is now turned into support by a new higher high and a higher low. So meaning that we have a new confirmed uptrend that is starting right there. So we have our higher high and a higher low. This price point came past our higher high, meaning that it's now a confirmed uptrend that is going up, right? So after it bounces off a resistance level, which is now our support. So remember what I showed you earlier. The moment that this price breaks through above this resistance over here, is now turned into our support when it actually comes to retest it and bounces off, right? So that is exactly what is happening. It was resisting the market, but the moment it breaks through and retests, it's now supporting the price to carry on. That's why we are saying resistance turns into support, support turns into resistance. So price broke through resistance, and resistance became the new support area. If the market makes higher highs and higher lows, it's now an uptrend, and this is confirmed uptrend that you can enter the trades in. So here we have our the opposite of what we just had right now. So when it breaks through to the other side, so we have our resistance here, we have our support over there, and then the market breaks through over here, and check what happens. It creates a lower low and then a lower high. So remember, when you see a lower low and a lower high, it's a confirmation that we have a downtrend that is forming, and the moment that it passes through, the next point passes through that point, that means we have another lower low being formed, and that is a confirmation of a downtrend that is being created. So now our support here is now resistance. So the moment that it was broken through here, this was the end of it being a support, a line supporting our price from breaking through to the lower phase. But then the moment that it broke through, the price broke through and came back to retest it, it is now turned into a resistance line, and it is basically our new resistance line that is preventing the price from going up until it maybe later on the market comes back and breaks through it again, right? So and then it will turn again into, and then again it will turn into our support line if that happens, right? Okay, so drawing our support and resistance levels. So support and resistance levels are a very important concept in trading. You will ever learn to master as a professional or full-time trader. So drawing those levels perfectly and neatly with minimum error is very crucial for your success in trading. So your ability of drawing those lines, those levels professionally, is basically the difference between a successful and unsuccessful trader, because that is just how important they are. So it is important to draw those levels perfectly, otherwise you will not be able to trade successfully. Winning and losing traders both draw those levels, but thing that separates winners from losers is the right selection and drawing of support and resistance levels for trading. So the mistakes many people make when drawing these levels is that they spend too much time trying to find the right placements for these levels. Support and resistance levels are zones, not just lines. Hence why it is impossible to draw a perfect line. Support and resistance lines tends to move some pips as the market moves. So it's never at the exact same level, hence why it's end up being a zone, right? So because the very recent touch of this market would not be exactly the same as the previous one. People move the market and not the machines, right? This is why looking for the right placements and spending too much time on perfecting your lines is just a waste of time. You shouldn't be doing this at all. So when drawing your support and resistance, you should only consider your shadow of candles and not the real bodies. If a real body is breaking a level just by some pips, it is not a valid level anymore. So we call this a false break. Support and resistance levels that are broken with false body candles are still valid and even more powerful levels because there's resistance that is forming, and you should watch those levels for trading signals. But we also need to know that a break by some pips or body of candles does not always affect the strength of that support or resistance level. You should not draw every level you see on your chart. Not every level can be called support or resistance line. If you do that, then your chart, you just end up with a lot of lines and it will become impossible for you to trade because it will be just confusing and overwhelming. It will be just too much for you to handle. So drawing lines everywhere on your chart will just complicate your whole trading. So only consider some valid levels when drawing support and resistance levels only. It is your duty to find the most valid levels of support and resistance, because drawing on every retrace or tiny rejection will only increase burden on you. Not every rejection is a valid rejection. Two things that you need to look for when it comes to finding some valid rejections that you can make use to draw your support and resistance line. So number one, it will spend more time in that direction. So the longer the market keeps trading in the direction, the stronger the rejection will be. If the market has made a rejection and then keeps moving in that direction very powerfully, that means that the rejection level is quite powerful and you should consider looking at it, right? And on the second note, it will cover more distance in that direction. So the more distance the market covers in what direction, the stronger the rejection will be. So distance is key. If a rejection is covering more distance, it can also be marked as valid or even a stronger rejection point. So the longer the rejection, the stronger the support and the resistance lines would be. On the opposite side, the lesser the distance of the rejection, the weaker the level would be. Very recent rejections are important because market tends to react to those rejections more often. So practice will make you perfect. So watch out for those levels that have a lot of rejections, because those levels are basically the strongest. So the more rejections, the more stronger those levels become.